Okay, hello traders and welcome back. Session 2, placing your first options trade. Very excited about this. I'm having a blast. I can't wait to get through all 8 of these. I keep an eye on the statistics. I watch when you start. I see when you drop off. Make sure you get through the whole thing. Engage with this content. First stock trade, first options trade. That's going to lay a great foundation for you to make sure you build good habits with every trade you place. Today, we're going to talk about choosing an options strategy. Now, I've spoiled the surprise. We know that this options trade that we're going to build is buying a call. We know that. But I do want to make sure that we talk a little bit about the other strategies and how you would go about selecting an option strategy. What tools do we have or should we have available for us from our broker that will allow us to evaluate, select, trade options better? That's what we're going to be looking at. My name is Scott Beck. I'm the head trading coach here. Let's... Okay. We don't have to start over. Just go back. My name is Scott Beck, and I'm the head trading coach. My name is Scott Beck, and I'm the head trader here at MarketWatch Group. I'm very excited to walk us through this. Let's go ahead and get into this next video. First and foremost, like always, I have to remind you about the disclaimers. This is for education and illustrative purposes only. We are not brokers. We are not advisors. We don't give advice. We don't give recommendations, even when we go through these trades, even when we give alerts. They're just alerts to stocks that meet our criteria. If you decide to trade it, you decide to trade it on your own. We make no promises about anything about guaranteeing results. With that understood, let's move forward. Let's understand today's agenda. What are we going to do? Let's understand first the types of option goals someone might have. People trade options for income. They trade for speculation. They might trade to hedge. We just want to understand how that might impact the type of strategy we choose. We want to understand a real clear intro to the basics. Buying calls, buying puts, particularly because we're going to buy a call. That's what we're doing here in this video series. We're going to build a call trade from the very, very beginning, walk through every step together. We want to preview the more complex strategies. We want you to understand what else is out there. Spreads, straddles, strangles, iron condors, butterflies. I want you to remember that we have a full options foundations course. 18 sessions, 1 hour apiece. If you want granular detail about options, if you want to roll up your sleeves, really, really dig in, let's do it. It's there for you. Let's dive in. And that's going to help you understand, especially the alerts when we do something that might be a little more complex. We want to make sure you understand the tools and resources that you have for strategy for selection to choose. We want to make sure you have the tools and resources for strategy for We want to make sure you have the tools and resources for strategy selection and for strike price selection. And we will show you how to do both. I want you to understand a risk profile. That is the roadmap. That is the key to every options trade. When we understand that, we understand all the possibilities. And lastly, we want to make sure that we align our strategies with market conditions. That's part of what we do at MarketWatch Group. We forecast the market. We make sure that we understand what makes the most amount of sense for the market that we have. Okay, with that in mind, let's go do this. All right, let's get into the body of this second video. First and foremost, let's have a little conversation about the different types of option goals. What are people doing when they trade options? What are they searching for? Now, we talked about one already, and that is leverage. Leverage. We want leverage. I don't want to have to pay $5,000 to buy the stock. I'd like to pay $500 to control the stock. Leverage. That sounds great. What kind of a person wants that leverage? A speculator. I'm speculating. I think it's going up. I want to buy it. I want to control it and get out. I want to buy a put. I think it's going down. Doesn't matter which way. I can speculate. What else? Income. Options for income. I own a bunch of stock. What can I do? I can sell covered call. I can rent my stock out. Sounds great, renting your stock out. Just get free money, right? Well, yes and no. You do get the money, but if it goes in the right direction, they're going to take your stock. So you have to decide, am I willing to give it up? If not, you might not want to actually move into that type of a income process. What else? Hedging. Now, we analyze the options activity of institutions from a hedging standpoint because that helps us understand fear. The VIX is a fear index. What does someone do when they're fearful? They're gonna say, "Oh, I'd like to protect myself if possible. I buy a put." Remember that a put locks in a selling price. It gives me the right to sell. So if I have a $50 stock and I buy a $50 put, and that put drops $10, it's only worth $40, but I have the right to sell it for $50. I protected myself. I bought insurance. So I can do income, I can do speculation, I can do insurance. Those are the core areas. Now, again, let's talk about basic strategies. Remember that our basic strategies, the building blocks of options, start with buying. I'm a buyer. I'm going to buy the right to buy the stock, or I'm going to buy the right to sell the stock. Those are the two things that I'm looking for. Buy the right to buy the right to sell. So if I'm bullish, I'm over here, which is where we're going to be because we are bullish. But if I was bearish, if I was looking to protect, I'm going to be over here buying puts. If we see the market go into a hedge signal, that tells us to buy puts on the SPY. You'll see that a few times in our alert process, in our group. Okay. So what else? We're looking to buy calls. We're looking to buy puts. Now, when I say building blocks, what do I mean? Well, buying options is great unless options are really expensive. What if they're very expensive? I don't want to buy expensive options. I want to buy cheap options. What would you want to do with expensive options? I'd like to sell them. So I can buy a call or I can sell a naked put. I can sell a naked call. People are like, whoa, I don't want to be naked. Well, that leads to spread trades. So in the grand scheme of things, I have the ability to look into spreads, straddles, strangles, butterflies, condors, iron condors. The world of options opens up because I can be a buyer, I can be a seller, I can be a combination of buyer and seller. Each piece that I put into place adds a different dynamic to the trade, and I can basically build trades to do just about anything. But it starts in one place, here at your first trade, buying a call. That's where we're going to end up. So what are some tools and resources for strategy selection? I'm in it. Now, you can see here in this little menu, I have a bunch of different options. Single, vertical. I've got ratio and back ratio spreads, calendar spreads, diagonal spreads, straddle, strangle, covered stock. That's a covered call. Collars, butterflies, condors, iron condors, rolls. There are a lot of different ways that I can come in here. And the way that this can help me is because this is going to help us understand risk profiles. If I have a single and I think I'm going to buy this slightly out of the money call, And right up here next to add simulated trades, you see I have risk profile. So if I click risk profile, that's what I'm now seeing here. Is this is the risk profile. What happens? Now at the bottom is my time axis. What happens if the stock is going down or up? And over here I have a zero line. That's my break even. And then I have profit. Making money versus losing money. If the stock goes to the right, that's going up. I am making money. If the stock goes down to the left, I am losing money. That is essentially, now that's for a call. Remember, it flips the script for a put. But this risk profile helps me understand I've got unlimited upside potential, etc., etc. Now, what if I do something a little more complex? I'm not going to do much with this, but I just want you to see. If I want to learn about something else, I could look at a spread trade. And a spread trade has a very different risk profile. That's what I really wanted you to notice. Very different. Fixed up top, fixed down below. It's a different experience. It changes the complexion of the trade when we turn it into a spread. This pricing model that includes the ability to build the trade and then see the risk profile of the trade is going to be instrumental for you in understanding options. What if? What if it goes up? What if it goes down? What if it takes a day? What if it takes a week? What if the implied volatility rises or falls, etc.? These are the tools that you're going to have. The other tools that we're going to have are obviously charts. And we're going to get into this. Here is a price chart for VSEO. You can see that the trend is bullish. It's accelerating. That's what makes us excited about it. So you're going to use the chart to get to the risk profile and build the trade. You're going to build the trade and understand what's coming up. How am I going to account for highs and lows, for targets and stops? And most importantly, remember that we want to make sure that we're aligning the strategy with market conditions. We're only looking at this because we're bullish on the market overall. We have a bullish market posture. We're bullish on the consumer discretionary sector. We found this stock from within that sector. Now we've been watching it, waiting, and we're going to get into this in more detail in the next video, waiting for it to go up and make a higher high, waiting for this consolidation to occur, waiting to break out of the consolidation. Now this thing moves into the next stage of the trade. Now we start to analyze for it. Okay, and that'll bring us to the conclusion of session 2. We know we're moving forward buying a call, but now you should have a little better idea of what are the different strategies. How can you find them and look at them, understand them better within your platform? What tools do you have and resources do you have to evaluate them, to play with them, and look at those, gain a little bit better understanding. Now what? Well, we have 6 more videos, but again, don't think about the next 6, just think about the next video, what's next, analyzing and setting up a trade. Now we're going to really start to put our hands on those tools. In Thinkorswim, it's the Analyze tab. In other brokers, there's other tools, but we want to make sure that you understand how to manipulate those and use them to your advantage to build better trades. We're going to choose one strategy, buying a call, buying a put to focus on. In this case, our strategy is buying a call. We're going to use those tools to explore different strategies, but we're going to particularly focus on one, and that is buying a call. We're going to look at that risk profile for buying a call. Make sure that you can see where's the risk, where's the reward, how does time impact the trade, everything you need to better understand, manage, and then close that trade. And then lastly, as always, make sure that you are engaging with the MarketWatch community on Circle, sharing, refining ideas, trade opportunities, strategies. I'm on there. All the other traders are on there. We'd love to see you in there. Make sure you take advantage. And with that, we're done here. Next video, analyzing and setting up the trade. Hope to see you there. And as always, happy trading.